the gold futures contract. Basically I'm selecting gold petal here, that's a 1 gram contract. So you'll have continuous 3-month expiries, 30th April, 29th and 30th June. Now till 22nd, 23rd or 24th of the month you can trade in the current month contract. Post that, if you are trading, that means you want to take a position for 10 days or 15 days, go to the next month contract. So here I'll be taking the 30th April contract. So once you select gold petal 30th April, you select it over here and it gets added. So currently the price is around 15,439. Now when you click buy on this, so one contract equals to 1 gram. What you need to do is you have to keep around 2000 rupees margin with the broker. The broker shows around 1900 as a margin here, but better to keep around 2,500-3,000 as a margin. So you put buy one contract. Now, so let me show you the chart once and then I will execute the order. So I had taken this position around the 14,500 level combined, around 6 grams earlier, around 14,500. Now it's around 15,500. That means around 1000, close to around 900 rupees gain. So that's the profit it is currently showing here. So I want to add more contract over here for a simple reason. If you see the chart here, I'm expecting the price to touch around this level, that is 16,535, because if the momentum comes in, the price may go up. Same thing like what we are expecting over here. So what I would do over here is, I want to buy it, click buy, one contract at 15,440, click buy. So the order got submitted. Let me modify it a bit because the price has gone up by 15,446 because the price is currently higher than what I had placed. So I'll put it around 15,444 and modify that. So the order got executed at 15,443. So the order got executed. Now the best part is you can draw the line on the chart and create a GTT. Like today I had got 2 grams. So I'll put 2 grams selling around 16,517 and I put create GTT. So here in the orders you can see initially I bought 1 gram at 15,424 and second gram I bought it at 15,443. So there was around like a 6 minutes difference. And if you see the GTT order, it's around 16,517. So that means whenever the price goes to 16,517, it will get sold. Now here two things may happen, assuming that it doesn't go up by 28th April. I sell the 20th April and then I'll go and buy the May contract. So that rollover. But looking at the momentum, probably in couple of days, that's around 7-8 days, the price should touch to that level. That's like looking around 6.97% kind of a return. Even if the system is switched off, the order will go through because it's a GTT order. Okay, so thank you.